Good morning, everyone. Today I'll be explaining more about Scope 3 emissions and the context for our business, Western Heights. So for Scope 3, what this means is all other indirect emissions associated with activities of the organization occurring from sources it does not own or control. These emissions are usually the greatest share of the carbon footprint. This includes emissions associated with business travel, procurement, waste, and water. In our case, I'd like to give two examples. Catering and logistics is one of them. So Western Heights relies on fly foods to supply catering for flights. Food production, packing, and delivery generate emissions before meals reach the passengers. The other example I'd like to give is employee commuting and business travel. Administrating staff often drive their own vehicles to the office. The senior executives fly with other airlines to attend industry events. These activities generate Scope 3 emissions because Western Heights do not own the vehicles and operate the flights of other airlines. Next off, I would like to briefly explain the minimum boundaries. So under the GHG Protocol Scope 3 standard, minimum boundaries refer to the least number of activities and emissions must be included in each of the 15 scope categories, essentially the baseline for what companies must disclose. For example, the minimum for purchased goods and services would be all upstream emissions from making and transporting the goods. So for Western Heights, the standard requires more than the minimum boundaries. According to IFRS S2 climate-related disclosures, Western Heights must report on the entire value chain of Scope 3 emissions. This means that the airline cannot stop at fuel refining or waste disposal. It must consider other indirect activities such as employee commuting, business travel, or other airlines as well, if they are financially material, which in our case, they are material. Next off, I'd like to explain more on the practical decisions we can make um, to measure the resources to use in measuring the Scope 3 categories, which we have to report. So based on the concept of financial materiality, Western Heights should focus the resources on Scope 3 categories that affect operating costs, revenues, access to finance, and reputation. So the categories are material include fuel and energy related activities. Category 3, purchase goods and services. Category 1, upstream transportation and distribution. Category 4, and waste generated in operations. Category 5. So for the first two that I've said earlier, we should put in high effort, which includes detailed data, frequent updates, and staff time to measure them, and moderate effort, such as annual data, secondary sources, manufacturer lifecycle information on an annual basis of resources to measure the other two that I've said earlier, which is Cat 4 and Cat 5. So these are very practical decisions that we can make for Western Heights. Thank you.